Robert Simon, who's the Managing Director of Global Portfolio Trading from Asia Pacific Equities from Citi, joins us from Hong Kong. Morning, Robert. Good to have you with us on Morning Mantra. To begin with, what are you bullish on and bearish on across asset classes?
We remain bullish on precious metals. We feel that that's going to continue to be a safe haven in the global times of uncertainty that we're seeing. We're also bullish on the U.S. dollar as well as global equities. We feel like there's globally about 20% upside for MSCI, ACWI, so that should continue to provide strength going through the balance of the year. Bearish, we remain bearish on energy, and we feel that oil should be relatively range-bound in a 100 to 120 range for the remainder of the year, x any exogenous shocks to that system, as well as base metals with times of slowed down growth and construction. We feel that that will be one of the sectors to be a little bit slower going forward.
Right. Robert, in times like these, then, how are you viewing the emerging market equities? What do you expect them to do in 2012?
We feel that there is a lot of good positive strength for global emerging at this point. For MSCI, GEMS, we have projected targets of plus 25 to 30% for the remainder of the year. We think that that is both from a positive growth standpoint. Globally, we have equities growing at 2.5% for the year. We have global emerging growing at 5.1% for the remainder of the year, as well as from a valuation standpoint. Global emerging is trading at 10.7 times trailing earnings. We think that a lot of the bad news is priced in. Obviously, that can be subject to a deteriorating political environment in Europe, contagion spread into Asia, or a Chinese hard landing. But we think that all three of those still remain relatively remote for the potential future, and we see a lot of good positive momentum and upside for global emerging.
Robert, what is your view on Indian and Asian equities, which are now amongst the cheapest in the world?
We do feel that there are some good valuations out there across the region. We feel that Asia is going to continue to be a focus and one of the few regions to break out early on. India, we feel, is still a concern, and we do have it as a underweight. We feel that Asia has a lot of relatively bad news priced in with the historical underperforming month-to-month revisions, earnings downgrade. We feel it is fairly late into that cycle, and we do expect good strength out of the region going forward.
Right, Robert, you are underweight on India, so is it a clear short call on India right now? Would you be willing to go long?
We do remain moderately bearish on India. We feel that it is still going to remain an underperformer for the region due to inflation concerns, poor liquidity. We feel that there are still unanswered questions for the second half of 2002. If some of those inflation concerns are quelled, answered, and investors do have a higher comfort level, that we feel that could be the play for the second half of the year.
Robert, do Asian central bankers look like they are going to be easing policy rates?
We really view that as kind of having two main drivers. One is going to be the growth picture, and as I said, the countries with heavy export, the heavy export-driven countries, Taiwan, Hong Kong, Singapore, China, will have increasing growth concerns. In addition to that, it is a heavy election year, 2012, for the region, and we feel that those two concerns together will drive fiscal policy and incentivize governments to have more relaxed growth potentials and policy easing.